Hey everyone, me Kevin here. It's Monday, August 9th, and we've got some market changes to talk about. Specifically, we're going to talk about changes in inflation. We're going to talk about COVID. We're going to talk about EVs. We'll talk about crypto and some other things that are running right now like crazy, like Moderna. I'm going to give you my opinions on that and some other stocks. And then I'll also finish by talking about the Federal Reserve and some changes that came out this morning. First, I want to start with this. This weekend, I was in Las Vegas. If you haven't seen my stories yet on Instagram, they're awesome. They're really cool. Check them out. But anyway, I was exploring. There were a lot of things I was doing this week in Vegas. But anyway, one of the things I was doing was I was talking to a lot of the vendors at different stores, whether it was Prada, Hugo Boss, the Rolex store, other stores, any store I could go into, I went in. And I talked to folks to try to find out what COVID has been like for them, essentially trying to do market research and kind of see how these supply chain shortages are really affecting them. First of all, there was not a single store that said they didn't have supply chain shortages. Everyone's having the same problem. Stores that usually have products in stock that they could sell to anyone aren't having those items in stock anymore. Normal sizes are selling out quicker, and these companies are waiting longer to get sizes for jackets or clothing or whatever. And specifically in Prada, and I made an Instagram and a TikTok about this, so follow me there if you haven't yet already. But Prada talked specifically about how their favorite customers lately have been people on unemployment and people getting stimulus checks in the past. In fact, obviously, because the stimulus checks came a few months back. In fact, so much so that they specifically priced bags around what the stimulus checks were coming out for. So like when the $1,400 check came, there were $13.99 priced bags, or maybe even purposefully like slightly higher priced bags like $14.99 or $15.99 bags to try to get people to take their savings and throw it on as well, or maybe a combination of stimulus check and unemployment. But it's really interesting because some of the workers were saying, hey, this is the first time they've really been able to afford these products, and now folks are able to spend money on these products which they previously didn't have access to. So they were able to use essentially this helicopter money to help prop up our economy to purchase these things, but this is now also exacerbating supply chain issues and, surprise, surprise, inflation, which is oftentimes a concern of helicopter money. This is just more sort of a realistic example of how this can happen. Again, other stores seeing the same problem with these supply chain shortages, and I know this is anecdotal. This isn't like research, right? I mean, it's not like data. I should say it's just anecdotal, and it's important for us to know that. I also know that some folks were commenting saying, hey, Kevin, we know you went into Rolex. It's common for them not to have men's watches. That's fine. I get that. I just want to clarify, folks in the actual Rolex store, the people working there, were saying, yeah, COVID has delayed our shipments that we would normally be getting even longer than usual. So our sales have suffered because of that. So their normal sales cycle has suffered because of essentially COVID supply chain disruptions, which is crazy. But now it's no surprise that consumer inflation expectations, where we just had new numbers come out for just this morning, the July expectations came out higher than expected. We have a 3-year outlook for inflation now up to 3.7% by consumers. This means that consumers think in 3 years, inflation's still going to be sitting at 3.7%, which is crazy. That's like way more than I would have expected consumers to think. But anyway, that figure got revised up. Year-over-year inflation figures are currently sitting at 4.8% for what consumers expect, and that number held steady. But the 3-year horizon expectation actually went up. Now, we do know that we have consumer price index numbers coming out for July this week. We've also got producer price inflation figures coming out, or index figures coming out this week. So we'll see how those numbers look. We're expecting them to be not so great, obviously. So inflation's definitely going to be something on the forefront, and if we combine this with what the Federal Reserve is doing, it's possible we're going to have a lot longer transitory inflation than we previously thought. So we want to pay attention to this. And I know half of you are like, well, duh, we thought it out all along. Well, you know, you never know. At some point, it's obvious, like this will not last forever. It's just a matter of trying to figure out how long are these pricing changes going to last. And remember, this is what's very important to know as well, because sometimes folks will say, well, Kevin, what, you think they're just going to raise the prices and then they're going to lower them again? No. That's not actually how inflation works, and it's very important to remember this. Remember, if something's worth $100 and then it goes up to $110, that's 10% inflation, right? If next year it stays the same, then you had 0% inflation. but you're still at that higher price, right? So remember, inflation is always a measure of the increase and that rate of increase continuing, essentially. Now, COVID doesn't help and the Delta variant doesn't help. For example, now we've got reports that 43% of Florida's ICU beds are now COVID occupied. Cases obviously peaked this weekend. We're going to see this trend continue. Now, because of the spike in COVID cases, it's no surprise that recovery stocks are selling off today. But what is a surprise to me is that tech stocks are actually not selling down. Most tech stocks that I'm following, whether it's Tesla, NIO, and I know some of these are EVs, but Enphase, Piton, Square, or some of the higher valued ones, you've even got Snapchat, whatever. A lot of these stocks are actually doing decently today. I was potentially expecting that we would see a sell down on recovery, but then maybe also some softness in tech, because tech might not be that flight to safety if we're going into a Delta variant era and an inflationary era, right? Unless people are parking their money in tech temporarily while they try to figure out where the heck to go, which I still think is RCC, actual real estate ownership, crypto, and cash. Cash for the opportunity to go buy on those recovery stocks when we finally get closer to bottoms, which I don't think we are anywhere near peak Delta variant fears yet, or FUD yet, right? Fear, uncertainty, and doubt yet. So cash for those opportunities, crypto, and actual real estate ownership. Now, I'm still holding on to a lot of tech, so don't get me wrong, I'm enjoying the rally, but I think the market is just confused right now in terms of where to flee for safety. The fact that Roblox, Wayfair, Palantir, Lemonade, C3AI, the Arcimoto, these guys are all up. It's kind of a bizarre market. To me, it's a big signal. The market's trying to still figure out, where do we go? Where do we go? Where do we go? In fact, one of the easiest places that I'm, in my opinion, identifying that the market's kind of confused about where to go is people are plowing into Moderna. In fact, Moderna, in my opinion, look, great company I've invested in. I bought their stock at 130, never bought them again. The thing's at like 488 right now. It's going literally to the moon. It's up 17.6% here. I personally think the market is so confused about what to do because of these Delta fears that the most obvious answer is literally right now, at least, where the market is heading to, and that's potentially Moderna. And crypto, I believe that as well, RCC, right? Real estate, cash, crypto, but also Moderna. Now, I think Moderna, this is a little momentum heavy. I don't know if the company is really worth this. If I look at earnings per share, you have declining earnings per share estimates going forward for the next 5 years. You've got a 29 earnings per share estimated for 2021. Which right now it's at 488. So 488 divided by 29, that means it's really only trading for 16.8 times earnings right now. Pfizer's trading for something like 10 times earnings in 2021, which is not that bad of a valuation. But the problem is the earnings expectations for Moderna plummet over the next 5 years. In fact, in 2022, they're expected to go to 24 EPS, 8 in 2023, and 4.8 in 2024. So if you go 488 divided by 483, now all of a sudden it's trading for 101 times 2024 earnings. So in my opinion, it doesn't make logical sense for investors to be plowing into Moderna. But quite frankly, I think one of the reasons they're plowing into it is A, because it's gone up and people like investing in things that have gone up, which is inherently momentum definition based. In other words, it's probably likely to come down. But also because the fundamentals don't support a long forward valuation, I think people are like, okay, yeah, this sounds good for right now. Let's park our money here for maybe the next few months while we figure this out and figure out what other opportunities to move to. So I'm kind of feeling like a shuffling it happening in the market right now. And the market's just confused about where to go. And that's why I do think we saw that crypto spike as well this morning. Again, RCC, real estate ownership, like physical ownership, crypto, cash. Those are the things I'm paying attention to right now. Personally, I'm already heavy on real estate. I'm otherwise just kind of plowing into cash unless I see crypto dips. And I'm still not seeing massive opportunities in stocks otherwise. Now, I will be transparent here. I'm keeping my eye on things like Airbnb, C3AI. I want to keep my eye on some of these stocks. I've got other stocks that I'm keeping my eyes on as well, so I'm interested in this. Chargers also jumped today. Chargers partially jumped because 28 House Democrats wrote a letter saying they want $85 billion for charging infrastructure. They're getting like 7.5, so I think this is just like Fugazi magic, like it's not going to happen, like whatever. But hey, you know what? Whatever. We also have the Federal Reserve that gave some updates this morning. Some of them I thought were really interesting. particularly Kaplan had this really cool reference. He said, look, if we taper faster than expected, then that's kind of like us taking the foot off the gas. It means we don't have to hit the brakes as soon by raising interest rates because we can kind of just like roll out. Okay, it's an interesting theory, but practically what that means is the taper might come faster and sooner. And remember what Jerome Powell said. Jerome Powell said, if we ever get ready to taper, we're going to make it crystal clear to you. Well, last week and this week, like every Fed board member and president has been getting out in front of the media going, we're making progress, we're making progress. In fact, just this morning, Fed Barkin said, quote, we have made substantial further progress. High levels of spending in the economy have existed for some time. Demand has not yet been hurt by Delta. Labor demand is still very high, but we still think inflation is mostly temporary. But I think their definition of temporary keeps getting longer, which I think is also worth noting. But anyway, Bostic this morning also said, we're on the road to substantial further progress. We had our jobs data come in very well. We expect to increase rates in late 2022, which the market's already thinking we're going to raise rates sooner than that. You had, yeah, okay, well, these are the three board members. Oh, this was a good one. Bostic also said he realizes the 10-year treasury has been pretty volatile, but he thinks it's going to pop back up to the higher rates that we've had previously. We're sitting at around 1.32 right now. He thinks we're going to go back to that 1.5 to 1.7 level pretty soon, which generally isn't that good for tech. So this is why in my RCC, you don't have a lot of tech. I'm still trying to like reduce my exposure to tech and certainly at least get rid of my call options. So I've work to do on that. I've been selling calls a lot. But still waiting for dip opportunities on other things, which of course, if I ever make a buy or sell transaction, you will get alerts for those if you are part of the Stocks on Psychology of Money group. Link down below, you get 40% off if you join. Now, there's also talk about this crypto amendment finally getting the green light, which would require brokers to report to the IRS what our crypto gains or losses are to make sure we pay taxes on those. This crypto amendment does make sure that miners are excluded from that definition and some others as well. A little bit unclear where we're going to be standing on staking, but this is actually a good thing for crypto. Remember what the chairperson of the SEC said, that, hey, the more clarity we get with rules, the quicker we can actually go mainstream with things like crypto, right? And this is really what's happening here. So these are some updates on what I'm feeling in the market, what I'm seeing in the market. Hopefully this helps you. If you appreciate this and you like this kind of content, make sure to subscribe, hit that like button, share the video, and folks, we'll see you in the next video. Thanks so much. Bye.